Well, I think the next few days, of course, like I said, I think we need to keep a close eye on what markets actually do, because I think we're still a few percentage points away from where we really hit some important key support. That's what the technical picture tells us. And from a fundamental perspective, look, you are getting a few sort of bits of bad news, more and more in the price. So I think we're getting to a point where a large part of the weakness is behind us. But I think we're not quite at the point, regardless of whether you look at US equities or equities anywhere else in the region, where you can come out, very clearly to say that, yes, we're most probably getting close to the bottom. Nearly there, but not quite yet.
What do you make of the latest reports that President Trump is set to go ahead on the full force, if you will, when it comes to additional tariffs on Chinese goods? Do you think that is something that is going to keep markets in Asia under pressure until we get more clarity, specifically the mainland markets that have already taken such a beating this month?
It is a risk we need to keep an eye on, because I suppose we look at the momentum of trade tensions, this is the direction we've been going, more and more escalation without any signs of that hitting a pause. Now, I think there's still room for interim deals, and November can go either way. We could end up with more tensions, or we could end up with some sort of deal as well. So both possibilities on the table. I think for Asian equities specifically, the real risk here is that, a no-deal scenario leads us to more dollar strength. And we know from the first part of the year, that's not been great for markets in this part of the world.
No, it certainly hasn't. And that's really a part of the story, too, when we talk about the yuan. Sure, there's some domestic factors going on that are pulling the Chinese currency to the downside. But how critical will the movements here be, given that we've seen it set at a decade low today? I mean, is this really a risk factor for continued outflows?
It is, and I think that's where there's this focus on the 7 number. And look, we're not too far away, and even if we got to that point, when a percentage move, it wouldn't be a big move. But I think it would be an important marker where markets would at least pay attention should we end up getting to that point. But again, I think that may be something to focus on for a day or two. I think markets will still be focused on what's the driver for that. Is that really coming from increased trade tensions? Is it because of US equity market volatility?
What do you think it is?
Today, it's just simply that we are getting a small move higher in the dollar. I mean, the thing with the renminbi is that you get dollar CNY, a large part of the move does tend to be exhibited by what the US dollar does. And absolutely, there is a risk element on the Chinese side. But, we simply don't see, using significant weakness to the renminbi as a good option for Chinese policymakers. Not clear why they do that.
And the Chinese authorities have told us they don't want to see a competitive devaluation of the currency. In fact, they said recently that they're going to take measures to root out speculators in so many ways. We've also heard several announcements coming out of Beijing recently indicating they're willing to do more to support the economy as this trade fight with the U.S. lingers on. Yet we haven't seen much relief at all expressed on mainland markets.
True, and I think that's where it's important to separate, I guess, when we look at the currency, how much of that's because the dollar strengthened, that nothing changed on the Chinese side, or are we getting a move that's disproportionate to that in any sense? I think on the equity market, all we're seeing is a change or a reassessment of the value being assigned, because it's not that you're seeing bad earnings. I mean, Chinese corporate earnings are actually holding up at double-digit levels, so that's actually quite strong. I think what's really sort of happening is an assessment of, does it sort of is the adjustment in trade tensions, the adjustment in dollar liquidity, the dollar strength, does that warrant a shift in multiples? We've seen markets like Korea and Singapore, for example, actually re-rate quite a bit lower, to the point where you could argue, there's some value emerging. And China's actually no different. And actually, when you add the fact that domestic consumer demand is still holding up quite well, that's where we can debate about whether at the bottom or today or in a few days, but that's where we look in the market and saying, look, might be something worth keeping an eye on.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.